Well, some interesting detail there for investors, especially right at the moment. And I should think that the rental market ought to have picked up a little bit, because 4 years ago we were lagging a little bit behind. So the return's on the increase, and that's terrific for you investors out there. Now, a guest on the show who has been on a couple of times before, Mark Potter from Baker Young Stockbrokers. Mark, welcome to the show.
Well, thanks very much for having me, Tim.
Mark, good
Great
to see
be
you.
back.
Yeah, good. Mark, while we're leading into the segment, can you give us a little bit of a rundown on how the share market's going at the moment?
Sure. So the market this morning, in the very near term, we've had quite a good rally over the last sort of week or so. And it's lifted about sort of 6 or 7%, with positive earnings figures coming out from the US. Right. Which is inspiring a bit of upward action. So it's good to see some green on the screens at the moment.
Absolutely. Before the show, we were talking as an uneducated share market follower, talking a little bit about what's taken place over the last few years. Can you give me a bit of a rundown on the highs and lows of the stock market over the last perhaps 2 or 3 years?
Sure. So, Tim, we had the Australian share market sort of going back had a really nice bull run between 2003 and late 2007. We saw the market come up from about 3,000 points on the index to about 6,850 over that period of time. We obviously had inspired by the commodities boom and the resources, and really great time in share markets. And then of course we had the downturn, which was actually brought about by problems in the US and home lending to people there. And the world economy just sort of went through this sort of collapse during 2008 in particular. Pretty dramatic. And we saw the index fall as low as 3,150 points from 6,850. So we basically reversed, all of those gains in 18 months that had taken sort of 4 years to unfold. Yeah. And then, the year following that, we had a very strong recovery trade. The market traded up to as high as 5,000. That was just a couple of months ago in April, and some really good money made up from that turnaround situation. And just recently, I suppose we've given up some of those gains. Yep. And the market's consolidating, and it's back around 4,400 as we speak. Okay. All right.
Well, that's interesting. Certainly from someone who sort of understood that there were highs and lows, but not in terms of the volume of what's taken place. What, from your point of view, might be the short, perhaps 6-month term outlook for the share market?
So going through to the end of the year, I would expect that the market can make reasonable gains from here. You could see 5 or 10% to the upside, say over 6 months. But I think as an investor, look out further than that. If you look out 12 or 18 months, I think, you can be more certain about the upside. And I would expect that investors could see, 20 to 25% returns over that period of time.
Something else that just jumps to mind, I guess, with interest rates currently from our point of view on hold.
Yes.
If they move toward the end of this year, is that going to have much of an effect, do you think, on the share market?
Well, interest rates have really sort of been more normalised, moving up from a low of 3 to 4.5, and on a world scale, the Australian rates are certainly reasonably high. There's still some room for the Reserve Bank to lift those rates in a stronger economy. Okay. So, I mean, the opposite side to that is that if they're lifting rates, it's because, hey, the economy's ticking along quite well. Yes. So I don't necessarily think that that's going to worry anyone.
So it'll be a reactive situation to the economy rather than holding it back.
Yeah, so I don't think it's something they're going to introduce to try and hold it back. And just at the moment, really, I think the Reserve is keeping things on hold while we just see, hey, we've got a few issues over there in Europe, and maybe China might slow down a little, and so let's just see what happens here before we nudge rates any higher just at the moment. All right.
Well, perhaps bringing ourselves back to a little bit of a property focused approach. I'm interested in property trusts and perhaps how they operate and what the benefits in people investing in those sorts of avenues might be.
Sure. So we all know that both property and shares are are good assets to invest in for growth. They're the growth assets. Another way of owning property can be to buy it through an actual trust. So that there could be a big hurdle out there for yourself to go out and buy a residential, a retail, a commercial type property. And be an investor in that. And often you need to employ significant leverage to do that, and it might be a bit uncomfortable. So why not look at a trust structure where a particular trust is managing a group of properties, and they're paying through the distributions to all the unit holders, and you can focus on trusts which are in all the major sorts of areas. A good example would be Westfield, which everyone knows, Westfield Shopping Towns. They have an excellent track record of growing shareholder returns over many decades, and I think Frank Lowe is actually Australia's richest man now, and most of those assets are all held in Westfield Trust.
Right. Okay. Interesting. I guess with the residential flavour, subdividing property, broad acres, and that sort of thing. Are there any particular trusts that you can mention that specialise in residential at all?
Sure. One of the exciting aspects in property about being in Australia is that we do have a high level of immigration. We do have a housing shortage. Property prices are reasonably high here compared to the rest of the world, certainly on the residential side, and so that's a good focus for developers. And Stockland is obviously a very well-known trust that focuses a lot of time and energy into property development in the residential side. Another one that we quite like, which does a little bit of property management, but it's the vast degree of its earnings come through development. It's not a trust structure; it's a limited company, but it pays good fully franked dividends anyway of around 5%, and that's Lendlease Group, which is quite well known, and
very much so.
Bovis Lendlease and Delphin, and these types of groups. And as a good example, they're developing a site just on the northwest edge of the Sydney CBD, about a kilometre out, and it's around about a kilometre of the Sydney Harbour, the old Patrick's stevedoring wharf, and that's going to be a 10 to 15 year development there in, get the name right, it's Barangaroo.
Right.
And over that period of time, that will become a $6 billion estate, basically.
Well, it'll be interesting. We'll have to keep our eye on it just to see how it progresses, because an interesting part of the waterfront real estate market. Now, before we head off to our next segment, I've got to mention Showdown 2 is coming up in a fortnight on the 28th of July, of course 1 o'clock Wednesday. And Mark, you're coming back to see if you can retain the trophy again. And understand that in true AFL spirit, the list has been rotated, and you're joining us, but with a new recruit.
Yeah, look, a bit like the Crows, blooding some fresh talent and reviving their team. I mean, we'd like to show the depth of talent of Baker Young, and my esteemed colleague Ryan Bamford will join us in a fortnight's time, and we're looking forward to retaining that trophy. We've got it well and truly bolted into the boardroom at the moment.
Good work.
So we'd like to retain that. And,
okay,
keep
well,
that going.
I know that Greg Troughton and Emma Slape, representing the property side of things, will be keen to see if they can wrest it back from you in a fortnight. Now on to our next segment, Behind the Blinds.